Well, good morning, good afternoon to everyone. Welcome to this month's Venable Nonprofit Organizations Practice Group monthly webinar, Managing Risks in an Election Year, Consideration for Nonprofits. This is a timely and very important topic for many of you attending, both executives and advisors to nonprofits as the 2024 election cycle is starting to heat up. My name is George Constantine. I'm chair of the Nonprofit Organizations Practice Group here at Venable, and I'm pleased to be able to introduce briefly today's two panelists who will be sharing their expertise. First, Meredith McCoy is a partner in our firm's political law practice group, an experienced counsel on all the issues you hear about today. Meredith also has a tremendous background and experience working directly with nonprofits on a number of different nonprofit issues, and I've had the pleasure of working with her on a number of matters together. So she's been great and will be great today. Before joining Venable, Meredith was an attorney at Federal Election Commission. And brings that experience to bear as well. Our other panelist is Dave Owens, counsel in the political law practice, and he advises clients on all aspects of federal, state, and local campaign finance and lobbying laws and regulations. He is a former in-house counsel of a major technology, international technology company, where he had advised that company on certain political law and lobbying law compliance matters there. We're happy to have him as part of this group. Dave has been a great partner of ours with a number of our nonprofits, helping with trainings and advising on state and federal compliance. Before turning it over to our panelists, I just want to note our next month's webinar will take place on March 20th. We're going to address matters related to nonprofit fundraising issues and compliance matters in the fundraising world. Stay tuned for the invite, should be coming out shortly on that. And now back to today's program, I'm going to turn it over to Meredith and drop from this screen so I can join the audience. Thank you very much. And over to you, Mary.
Thank you, George, and pleasure to be with you all today. Thank you for joining us on a very timely topic. Obviously, the 2024 elections are in full swing, and a lot of what we hear from our nonprofit clients in an election year is hesitation to be able to jump into the fray on activities that may be even tangentially related to the election. And so we'd like to spend some time today talking about how you as in-house counsel can get to yes, and where the lines are to draw with your teams, and the risks to keep in mind as you do so. As I said, we get a lot of hesitation from our clients in an election year, but there's a lot of opportunity in election years for nonprofits, whether or not you want to get involved electorally. And that includes more attention to the issues you're already working on, perhaps because candidates are talking about them. Activated stakeholders, your members, your supporters, are engaged just by virtue of what's going on in the political arena, and so therefore may be more motivated to get involved in the other work you're doing. And nonprofits have a chance to shape debates in election years, whether or not they're supporting or opposing certain candidates. Occasionally, organizations also get into the crosshairs of candidates, and there's an opportunity to defend yourself and defend your organization's reputation. That said, as we'll go through today, there are risks, primarily under the tax code, campaign finance law, all of which vary from jurisdiction to jurisdiction. And there's increased scrutiny in an election year as well. So we'll go through some of those risks and how to manage them today. We're going to start with an overview of the laws that apply. We will try to be brisk on this, but we do want to give you some terminology to work with and resources available. Our slides and the recording of this presentation will be available, so if we move briskly through this section, you'll be able to go back and refer to the slides later. But then we want to shift gear and talk about specific activities that we see nonprofits getting involved in year over year, election over election season, and go through specifically public education, engaging with candidates and office holders in an election year, lobbying and grassroots mobilization, how those efforts can proceed during an election season, and the personal political activities of those connected to your nonprofits. We will also, if time permits, briefly touch on PACs and how your affiliated organizations can engage with one another. during the election year. Dave?
Thanks, Meredith. So to set the stage, I wanted to start with kind of the overarching legal framework for many of the concepts that we're going to talk about today. From a compliance perspective, there are two separate but overlapping bodies of law to consider. For tax-exempt organizations, the Internal Revenue Code will govern how you can engage in election-related activities without risking your tax-exempt status. So those rules should always be top of mind for nonprofits. But campaign finance law will attach when engaging in certain election activities if you're supporting or opposing candidates, parties, and political committees. The intent of these laws are generally to prevent corruption and to promote transparency so that the public understands who is funding campaigns or related communications. So with that, I'm going to turn it back to Meredith, and she'll start with tax law considerations.
Thank you, Dave. So the tax law considerations will vary depending on the type of organization you're working with. Public charities, 501c3 public charities, are absolutely prohibited from engaging in campaign intervention. There is no de minimis amount of campaign intervention that a 501c3 can do. It is an absolute ban, and the consequences can include revocation of your tax-exempt status. On the other hand, 501c4s, 5s, and 6s, we'll focus on C4s and C6s in this presentation based on who we know is attending, but similar rules apply to 501c5s as well. These organizations can engage in campaign intervention, but it cannot be the primary purpose of these organizations. And so we'll talk in a little bit about what primary purpose means. But what is campaign intervention? The basic idea is that campaign intervention is any activity to participate or intervene in a political campaign in a way that supports or opposes candidates or groups of candidates. And this applies to activities at the federal, state, or local level. So this includes examples of, public communications, if you are saying vote for or vote against a candidate, but it can also extend to activities like grant making. If you are an organization that makes grants to another organization and the grants it's understood that the grants will be used for activities that support or oppose candidates, that is indirect campaign intervention, which is considered campaign intervention for the tax code. So you can't do indirectly what you can't do directly. And to measure this, to measure campaign intervention, the IRS uses a facts and circumstances test. There is no bright line as to how much campaign intervention is okay, though generally speaking, for C4s and C6s, we usually look to make sure that campaign intervention does not exceed about 40% of overall activities in a given year. So C4s and C6s can do campaign activities to support or oppose candidates, but it can't exceed about 40% of your overall activities. And the IRS will use a facts and circumstances test to assess what is or is not campaign intervention. So they will look at factors like, does the communication or the activity reference a candidate or the election? Is it done close in time to an election? Is the audience selected in a way that targets certain types of voters? People who are more likely to vote Republican or Democrat, or more likely to support a woman who's a candidate. They'll look at subtext. So does the imagery around the communication suggest you're supporting or opposing their candidacy? Is it a picture of somebody with devil horns drawn on them in a communication aired shortly before the election? That might suggest to the IRS that you are trying to dissuade people from supporting that individual. And other factors include things like, are the candidates talking about this issue? Does the organization have a history of engaging in this type of communication or activity, whether or not it's an election year? So the IRS can look at some or all or other factors to assess whether something you're doing is is campaign intervention. And so it's important to keep total context in mind as you are helping guide your organizations onto what they can and cannot do for tax purposes. Other tax law considerations for C4s and C6s include reporting. C4s and C6s must disclose their political expenditures on the Form 990 and on Form 1120 POL if there is tax liability. So tax liability occurs when an organization has investment income and political activity. An organization must, a tax-exempt organization must pay a tax at the highest corporate rate, which is 21%, on the lesser of its net investment income or its political activities. So if you're an organization that has a lot of investment income, you may be paying a tax on every single dollar spent on political activities, which may be something the organization is comfortable with, but it's a conversation you should have on the front end rather than when tax time comes around. And then finally, for trade associations and other membership organizations, dues are not deductible. Dues allocable to lobbying and political activities are not deductible to your members as a business expense. And so there are rules around notifying your members about the extent to which their dues are not deductible. So that's a quick overview. That is literally a very quick overview of the tax law considerations. I'm going to kick it to Dave now to talk about campaign finance.
Thanks, Meredith. I saw a question that came through the chat that I wanted to quickly address. And the question was whether or not there are FCC rules that organizations need to consider. The answer is yes. And that's true for your radio and television communications, but we're not really going to focus on these today. We're primarily going to be focusing on campaign finance, tax law, and to a certain degree, state lobbying laws.
Oh, sorry, Dave. Just to add, a quick overview, the FCC does regulate broadcast communications. So if you are doing activities that qualify as, if you do activities that relate to an issue of public importance, which is the standard the FCC sets, you may have to comply with their requirements as well. Though generally speaking, they often overlap with some of the campaign finance requirements Dave's about to talk about.
Thanks, Meredith. So now we'll turn to some key campaign finance law concepts. So campaign finance laws will generally have limits on the amounts that individuals and organizations can give directly to candidates and committees and the types of entities that can make contributions. On the federal level, corporations, and that includes nonprofit corporations, can't make direct contributions to candidates, parties, and PACs, other than individual expenditure committees, which we'll talk about a little here later. And campaign finance law may also require groups that make contributions or expenditures over a certain threshold to register as political committees and then disclose all the amounts received and spent on the particular activity that the organization is engaging in. And even if an organization is not required to register and report as a political committee, there may still be other reporting obligations for engaging in election-related activities. So we can keep that in mind. And importantly, an organization's donors may be disclosed if it makes expenditures for regulated communications in connection with an election, like independent expenditures or electioneering communications. Then another key consideration is that payments for certain election-related communications might require disclaimers. So the communications may need to say, for example, paid for by the name of the organization or committee that's paying for the advertisement, or include a statement that says that the communication isn't authorized by any candidate or committee, so that the public understands that the communication hasn't been coordinated, which is another important concept that we'll unpack here in our discussion. Under constitutional law, there's a key distinction between contributions and expenditures. As we mentioned, contributions can be limited under campaign finance law, but expenditures can't. And what's a contribution? A contribution is really anything of value that's given to a candidate or committee. And that can be monetary contributions, which you'll see most often, but it can also be in-kind support. That's like providing goods or services to a candidate or committee, or if your organization provides staff time that benefits a candidate or committee. The value of those kinds of goods or services provided will need to be disclosed by the candidates or committees on their campaign finance reports. And expenditures are really funds spent to expressly advocate for or against candidates and parties done without coordination. And we'll talk more about what coordination here is a little bit. So this slide kind of lays out some activities that might be considered contributions. The key thing to keep in mind is that if your organization is doing anything for free for a candidate that the candidate might ordinarily pay for, then your compliance antenna should be raised because that might be a contribution under campaign finance law. So that might be doing research or writing speeches or white papers, sharing polling information that your organization has or any other non-public information, certainly sharing email lists or other intellectual property, hosting events, soliciting contributions. All of this are most likely a contribution under federal or state campaign finance law. Now, if a candidate pays fair market value for goods or services, then a contribution doesn't result, but there might still be a tax law issue to consider because providing those goods or services might be considered campaign intervention for 501c3 organizations. So now we'll turn to independent expenditures. So what are independent expenditures? They're payments for communications that contain express advocacy and aren't coordinated with a candidate, party, or their agent. So, what's express advocacy? There is a simple standard called the magic words test from a case called Buckley, and that's pretty straightforward. Those are any words that are clearly kind of supporting candidate, like vote for, elect, support, defeat, reject. But another standard is the functional equivalent standard, which is a little more nuanced, and many states have adopted. The FEC rules say that a communication has the functional equivalent of express advocacy only if the communication is susceptible of no reasonable interpretation other than as appeal to vote for or against a specific candidate. So it's not as straightforward as the magic word test. And again, many states have adopted some variation of the standard. There are no limits on spending by individuals or corporations on independent expenditures, nor are there limits on the amount of contributions that a corporation or an individual makes to groups that make independent expenditure only committees, also known as super PACs. Now, any independent expenditure is going to require kind of the paid for by disclaimers that we talked about before. So you should also keep that in mind if your organization is contemplating making independent expenditures. Electioneering communications, as the slide lays out, are under federal law. Any communication that's made via broadcast, and that includes radio or TV, that refers to a clearly identified candidate targeted to the relevant electorate in the 30-day period before a primary election or the 60-day period before general election. Any of these communications are going to require disclaimers that are set forth in the FEC regulations. These communications can't be coordinated with candidates. There are reporting obligations for making electioneering communications. this slide lays out the thresholds, but the key thing to keep in mind is that there may be time-sensitive reports that you need to file if you make electioneering communications. And sometimes those are due within 24 hours. So there are some practical considerations to keep in mind if you're going to make electioneering communications. In terms of donor disclosure, the FEC rules require that the reports disclose any donor who makes who makes a contribution of $1,000 or more for the purpose of furthering electioneering communications. As we flagged here on the slide, it's possible for a 501c3 organization to make to make electioneering communications because express advocacy is not required for communication to qualify as an electioneering communication. It just needs to refer to a clearly identified candidate. We'll talk more here about political committees. The key thing to understand is that, and this is true of the federal under federal law and state law, is that if a nonprofit has to register as a political committee by virtue of reaching a specified contribution threshold or makes expenditures over a certain threshold, it may be considered a political committee. And that's challenging for nonprofits because that might require the organization itself to register and then report all the receipts that the organization has received and any disbursement made by the organization. So as a practical matter, you might consider forming a separate entity to engage in certain activities to avoid having to disclose all of this burdensome information. State and local campaign finance laws. The challenge with state and local campaign finance law is that there's not much uniformity across the states. In some jurisdictions, contributions from corporations, including nonprofits, might be allowed, and it could be unlimited. It could be subject to a limit, whether that's per election or per election cycle. And then the limits may vary by office, right? Your statewide officials may have higher limits than local officials. And you may be required to register as a political committee before engaging in any election-related activity in a jurisdiction. Now, one key thing to keep in mind is that there is no limit on the amount that can be spent on independent expenditures at the state and local level. And as we'll talk about more, this is also true of ballot measures, although registration and reporting may be triggered if you do make independent expenditures or support ballot measure committees. If your organization has a federal PAC, the federal PAC may be allowed under the applicable laws to make contributions or IEs in state or local races. I think the key takeaway here is that before you considering kind of participating in a state and local election, you have to look at both the state law and the local law, because many localities and municipalities have their own laws which might cover campaign finance. And then one very important piece, especially for nonprofit groups to understand, is that donor disclosure laws at the state and local level continues to be a trend, and the focus is on kind of exposing what's been known that been called dark money, so that there's some transparency as to who is funding communications or other activities made by a group. And so some examples would include California, New York, New Jersey, Maryland, certainly Arizona, all require some level of donor disclosure.
Dave, before we move on, we do have a couple of questions that have come in. One great question that came in as you were talking about independent expenditures was the impact of a decision called Crew v. FEC, which was a major ruling on the extent to which organizations that do not register as political committees, but nonetheless make occasional independent expenditures, are required to disclose their donors. And before this decision, it was sort of understood that a nonprofit that makes an independent expenditure wouldn't necessarily need to disclose donors unless the donor gave for the purpose of that communication. So a very narrow earmark from your donor. But what Cruz said is that, in fact, that standard is too narrow. And the standard for whether donors should be disclosed by a nonprofit that makes independent expenditures is whether a donor has given for political purposes more generally. So not just for the specific communication, but for the purpose of influencing an election more broadly. Though unfortunately the court didn't really give a clear standard as to what is meant by for the purpose of influencing an election. And anybody at a nonprofit who knows, how these conversations with donors go, know that there's a lot of gray area in terms of what the donor is intending you to use their money for. So, what we have, the long and short of what we have seen, the impact we have seen from this Crew decision is that a lot of nonprofit organizations are moving political activities to and moving independent expenditures to a separate political committee. They are forming PACs that then make these independent expenditures as a way to mitigate the risk of donor disclosure on the nonprofit itself. So before we, we'll move on a bit and pivot to some very concrete examples of how these laws may come into play for your organizations in an election year. So first up, we want to talk about public education. This is something that many nonprofits do. It includes general issue advocacy. It might include voter registration or get out the vote activities. And it may include sort of educating stakeholders about the voting records of sitting officials. So all of these things we would consider public education and are activities that nonprofits may perhaps shy away from in an election year. But we want to talk about where the line is and for different types of nonprofits and what you can do. So when we're talking about public education, there's a few risks to be issue spotting. The first is the line between issue advocacy and lobbying. We haven't really got into detail here about lobbying laws, but suffice it to say that organizations, 501c3s have limits on the amount they can lobby, and lobbying activities have to be disclosed both to the IRS and to federal and state regulators in certain circumstances. So the one question to ask is whether your issue advocacy is actually lobbying, which, is it taking a position on pending government action and calling on either lawmakers or the public to take a certain action. And we provide an example here on the right. This ad is on its face just a pure issue ad. It talks about how healthcare costs are rising and says just fix it. It's fairly generic. It's focused on the issue itself and doesn't call for a specific response from anybody. But if we add a tagline here and say, call Senator Smith and tell her to repeal the act, we have probably crossed the line from issue advocacy into lobbying. The next trap to be aware of is the line between issue advocacy and campaign intervention. And this is important because this is a line that C3s cannot cross. C4s, C6s, you can cross it, but you are going to start to have to consider whether you'll report it to the IRS and whether you have to pay taxes on it. So consider now our same ad here on the side, but the tagline is instead, it says healthcare costs are rising, just fix it. Or sorry, healthcare costs are rising, but Senator Smith doesn't care about your family. Just fix it. So this is a communication that the IRS might look at and look at all the facts and circumstances. On its face, it doesn't mention an election, but what if Senator Smith is on the ballot and this ad is released shortly before her primary election? Or what if this runner is actually Senator Smith? And so we suddenly do have a reference to a candidate, and maybe the ads run shortly before the election, and it's a very it's a critique more of her, Senator Smith doesn't care about your family, than a legislative call to action. Depending on the specific circumstances, the IRS may say an organization has crossed the line from issue advocacy into campaign intervention. The next line would be under campaign finance laws. Have you crossed from issue advocacy into express advocacy? And so this might be, healthcare costs are rising, just fix it, vote on November 3rd. And so here we have a clear reference to the election, vote on November 3rd. And perhaps if this is a photo of the senator, then, we are very clearly in express advocacy territory. Because we are suggesting how folks should vote on a candidate. Now, finally, even if it says nothing at all, we're back in issue advocacy territory, but this is a picture of Senator Smith, and this airs on television, that might be an example of an electioneering communication, because even though we're not talking about the election, even though there's no express advocacy or other references to an election, we have pictured Senator Smith here and she is on the ballot. So there may be a reporting obligation and disclaimers required. So hopefully this is a very quick rundown of how the communications your organizations bring to you may trip different laws, but hopefully it also shows you how different changes in the language, in the call to action, in the context can help you get to yes with your organizations and come out with a communication that both serves their purposes and stays on the right side of the compliance lines that you're looking out for. Now, one other thing to add on candidate education is that there are very specific rules under the tax code for 501c organizations that are engaged in educational activities. And so there are specific rules with respect to voter registration and get out the vote activities, candidate questionnaires and voter guides, and legislative voting records. And the upshot of all of these specifications is that the activity has to be nonpartisan. As the C3 is doing these activities, they have to be done in a way that doesn't suggest to the reader or the viewer that your organization is encouraging a vote for one candidate or another. So for example, if you're doing voter registration or get out the vote activities, it has to be equal opportunity. You aren't targeting specific voters because you think they're going to vote for a certain candidate. You aren't tying registration to a certain issue, register to vote today so that, we can get an abortion ban or an abortion rights, protected by Congress. You're not telling them the type of candidate you want them to register to vote for. Now, a question came up in the chat earlier about, what if our organization is targeting people based on other factors that some might see as a proxy for partisanship? So we're targeting people of a certain demographic. We're targeting people of a certain age or race, or because they live in a certain area. And someone could say, well, that's a proxy for Republicans, or that's a proxy for Democrats. And the answer here is that as long as your organization has a legitimate nonpartisan reason for targeting those particular individuals, then the activity may be okay. But just keep in mind the IRS is going to look at all the facts and circumstances to see if that is really your true motivation, or if you are merely using that as window dressing for actually trying to target, Republicans or Democrats. And so, the same sort of principles apply to candidate questionnaires and voter guides and legislative voting records. It has to be done in a nonpartisan way that isn't suggesting you're telling people who are the good candidates, who are the right candidates, who are the right officials in office already. So if you're a C3, just keep in mind that there are very particular specifications to run through as your organization engages in these activities. They may be able to be done in an election year, but just know that you have to cross your T's and dot your I's and meet the IRS's specific requirements. I think, let me just see. So, one thing, before we move on, I do want to share the CLE code for this session. It is election 2024. Again, if you're seeking CLE credit, the CLE code is election 2024. Dave, I'll kick it over to you to talk about lobbying activities in an election year.
Of course, yeah. Thanks, Meredith. So we'll talk a little bit about lobbying and grassroots mobilization, which many nonprofits frequently engage in, but may have questions about during an election year because of some of the issues that Meredith has mentioned. So some examples of that may be whether or not you can praise or criticize sitting office holders during an election year, or engage in advocacy related to legislation or regulatory action that's part of an ongoing campaign. And there are lots of considerations to keep in mind. And some of these kind of dovetail with what Meredith was pointing out with respect to issue advocacy versus campaign intervention. So this slide has a couple of examples of communications that we can look at and kind of talk through the issues that are presented. So this top ad where we've got tell Senator Smith to do your job, fill the vacant seat on the Supreme Court, and we've got a telephone number for folks to reach the senator. Then the ad below has tell Senator Smith, do your job, stop playing favorites, sign now. Obviously, the top communication has a clear call to action. It's specifying what we want folks to tell Senator Smith when they call using the telephone number that we've provided on the ad. The second ad is a little more vague, right? We've just got a hashtag, do your job, stop playing favorites, unclear. So we got to think through whether or not these are going to be considered lobbying communications or might they be considered campaign intervention. And that's true for both campaign finance law and tax purposes. So depending on the timing, these might be considered electioneering communications under state law, right? Because if it airs between 30 days between the primary, 6 days between the election, or whatever the relevant periods may be under state law, then you may have campaign finance requirements. And if you have campaign finance requirements under state law concepts similar to the FEC definition of electioneering communications, then you may need these disclaimers. In certain jurisdictions, you may have disclaimer requirements under state lobbying law. And state lobbying law, unlike federal law, will frequently require registration and disclosure for grassroots communications. And even further complicating the issue is that if you're required to register to lobby, some states may require you to disclose underlying donors, right? So again, but before you engage in any activities near the election, we need to think about the timing and whether or not you're implicating the state or federal campaign finance law, and then the tax code, and also any other disclosure requirements that you may have. Slide kind of lays out the do's and don'ts for praising or criticizing sitting office holders during an election year. I think probably the avoid section is more important for nonprofits to avoid, particularly for C3s, to avoid campaign intervention. And what you really want to do is not refer to the election, voting, removing anyone from office, criticizing a candidate or office holder's personal character in their communications, or otherwise comment on incumbents for whom your issue may be defining a point of contention that's being discussed in the particular election, or otherwise compare opponents that will, under the facts and circumstances, may be considered campaign intervention and a no-no for 501c3s. now about opportunities to engage with candidates and office holders. And nonprofits may have questions about that, certainly during the election year, because of the risks that we've discussed. But there are ways to engage directly with candidates that are permissible. Some of those may be through candidate and office holder appearances, by educating candidates, or by hosting candidate debates and forums. All of these have lots of rules to consider, but are doable as long as you understand the traps before you engage in any of these activities. Start here with some of the traps. And again, this continues the theme of when might your interactions be considered campaign intervention for tax purposes, or if you're providing anything of value to a candidate or a committee, might they be considered a contribution such that campaign finance law is implicated? And so one thing to think through, to the extent that your organization may be hosting events where candidates are going to appear, is are the candidates going to be engaging in electoral advocacy on behalf of their campaign? Will they be fundraising? If they do either of those, then there's a chance that might be considered campaign intervention or implicate campaign finance laws. Another consideration to keep in mind is whether or not you're providing this particular opportunity or resource just because the person appearing is a candidate or office holder, or is there a legitimate non-electoral reason for this appearance? Is the opportunity that you're making available going to be available to everyone participating in a particular election? You have to look at the rules and understand whether or not your organization has to make an appearance opportunity available to everyone participating in an election. Are they only participating by offer, or is it upon request, right? And then again, you should always keep in mind, would a candidate generally have to pay for whatever opportunity or resource you're providing? If they do, then again, your antenna should be raised on whether or not you're triggering campaign finance law. Then another consideration here is who is the audience going to be, right? Because the rules are different for candidate appearances depending on whether or not it's the appearances just before your members versus the general public, which will be more strictly regulated more often than not. So for educating candidates, you can certainly lobby, right? And this is true for 501c3 subject to your applicable lobbying cap. You can encourage candidates to support policies. But C3s can't ask candidates to take a pledge. That is essentially an endorsement. You can provide policy papers and other materials, and this is particularly true if your organization has expertise in a particular issue. We recommend making those resources available to the public so that you're not triggering any campaign finance rules or making a contribution to candidates. But you can post them and push them out to candidates. But you should make the materials available to all candidates participating in a particular race, and you shouldn't create any content at the request of candidates unless it's going to be shared among everyone who's going to be participating in the election. Talk about appearances by candidates where the appearance is not related to candidacy, and generally that's going to be fine, right? Because there are going to be circumstances where you've got an incumbent official who's going to come and speak. They may have subject matter expertise on a particular issue, or a candidate might be a community leader. The key is that the candidate shouldn't mention the election, and invitations should kind of refer to the person appearing in their official capacity. I think from a practical perspective, the most important point here is to set expectations in advance of the appearance, and that may be kind of through a short email agreement so that everyone understands the ground rules. And you should also make sure that you're working with official side staff when you're kind of putting together these events with particularly with office holders, so that there's no misunderstanding that this may be campaign intervention, and you should make sure that there's not going to be any fundraising that's going to take place at the event, such that it might be construed as campaign intervention or otherwise trigger campaign finance rules.
So Dave, we got a question early in the presentation with a specific example of this. The questioner asks, if their nonprofit is hosting their annual gala in the spring and they want to invite city council members, does that fall into the bucket of acceptable appearances, even if some of those candidates are on the ballot? Or do they need to invite everyone who's running for city council this year if they are inviting if they're inviting the sitting council members?
Yeah, so if they're are just going to attend the gala, right, and be at a table with members of the organization and donors, then that's not really going to be a campaign intervention consideration, right? To the extent that you're going to invite them to the gala and they are going to engage in some kind of advocacy, right? They're going to talk about their candidacy. Then you might have to consider whether or not you should be inviting everyone else. But I think if it's just kind of, hey, you're invited, come, maybe you're a keynote, then that doesn't, I think, cross the line.
Yeah, I agree. And I think the other thing to keep in mind will be a topic that is the topic of a whole other presentation, which is the government ethics rules and whether you can provide a ticket for free, or if the city, county, or state ethics rules that apply to those city council members allow you to provide the ticket for free, or if they need to purchase it. All right, so this topic we get a lot of questions on in election years because a lot of the people who are attracted to working for nonprofits are attracted because they are passionate individuals who care about the mission of the organization, and that passion may extend into electoral activity. So what are organizations to do about personal political activity in an election year? Importantly, organizations, directors, employees, and volunteers do not lose the right to engage in personal political activities, but they shouldn't be engaging in political activities on behalf of the organization without the organization's authorization. And there also needs to be some consideration given to whether someone might believe their statements are on behalf of the organization or their activities are on behalf of the organization. And whether they've used organizational resources, which could be a considered campaign intervention under the tax code, or contribution under the campaign finance laws. So let's jump into that a little bit deeper. Some ground rules for personal political activity. Individuals, when they're engaging in political activity, should engage in activity in their personal capacity unless authorized by the organization. It should be clear, for example, on social media profiles that their statements or their posts are their personal views and not those of any organization they're affiliated with. Individuals must not use organizational resources without specific approval. And organizational resources is really broad. That includes organization time. So, we say own time, own dime. For personal political activities. They should not be using organization computers, devices. They should not be using organization data. So you cannot download the donor list to the nonprofit to come up with a solicitation list for a candidate. That's a hard no. They shouldn't be using the organization's intellectual property to support or oppose candidates without the organization's permission. So those are some common examples that we see. It is okay under the tax code and campaign finance law to use your job title and affiliation for identification purposes only, but it should be clear that they are used for identification purposes only and not as an indication that they are speaking on behalf of the organization. We strongly encourage organizations to adopt a political activities policy. Now is a great time to do that because personal political activities are still ramping up. We're still in primary season. It's a great time to get ahead of it and let your employees and volunteers and directors know what your expectations are going into election season. This should outline the fact that individuals aren't authorized to speak on behalf of the organization on political matters. They aren't, it should discuss appropriate uses of your official newsletters, website, social media, your letterhead, logos, etc., and outline the expectation that organizational resources aren't going to be used. Keep in mind that the ability to regulate off-duty activity is governed largely by state employment laws, and those will vary from state to state. So you'll also, as you put together a political activities policy, which is something we do for a lot of our clients, you'll also want to consider state employment laws just to see if there's anything else that bears on the policy. Finally, we'll pivot away from personal political activities and spend just a minute on ballot measure advocacy because I know this comes up a lot. Ballot measure advocacy is considered lobbying under the tax code. But under the campaign finance code, or under campaign finance laws, it is considered activity regulated by the campaign finance laws, meaning that when a nonprofit engages in ballot measure activities, so activities to support or oppose a referendum or other type of ballot measure, they are engaging in lobbying for tax code purposes. So a 501c3 can engage in ballot measure advocacy up to their limit on lobbying under the tax code. And but keep in mind that even though it's lobbying for the tax code, an organization that supports or opposes ballot measures may be required to register and report as a political committee. And so keep in mind whether the advocacy for or against a ballot measure would result in donor disclosure, whether it would require disclaimers, whether it's going to require regular reporting, et cetera. And so so this is a good example of how all types of nonprofits can get involved in ballot measure advocacy, but there's a lot of laws to keep your eyes on at once as you do so. So we are drawing close to the end of our time, but we do want to touch briefly on affiliated organizations. We know that a lot of your organizations may have a 501c3, a 501c4 or 6, and you may or may not have a PAC. As outlined at the beginning of this presentation, 501c4s and 6s may have connected PACs, meaning they can pay the administrative costs and solicitation costs of a PAC. But what's really important here on this Venn diagram is that the activities, the political activities of a C4 or a 527, that is a PAC, cannot intersect with the activities of the 501c3. So we get a lot of questions, for example, about, can we have a shared website with our C3 and C4? Can we talk about the C4's activities to support or oppose candidates on that website? And the short answer is no, that's not a great idea if the website is also going to be associated with the 501c3. You're going to want to build in layers of separation and a different look and feel to pages on a website that talk about candidate activity, so that it's not attributed back to the C3. And so that's a really concrete example of how these organizations should not intersect, but there are a lot of different ways it can come up. So, but the other thing about affiliated organizations is that you can use them strategically. If you are a family of organizations, then you may be able to strategically use different organizations within that family for different purposes. So consider a 501c3 that wants to increase its lobbying and political activity. that obviously it can't do any political activity as a C3, and its lobbying activities are limited. But if it forms a related C4, then that C4 can take over the lobbying and political activities, or take over a portion of the lobbying and all of the political activities. The C4, could also engage in ballot activity because it has no limits on lobbying like the C3 does. So, and in the second example, as we touched on a little while ago, a 501c4 or C6 might consider forming a political committee, a 527, to conduct independent expenditure activities that support or oppose candidates. In doing so, you may be able to segregate the risk of donor disclosure or other reporting obligations on the C4 or C6 and push them to a political committee where donors who have no interest in being disclosed can be protected and not involved in funding the activities of the PAC. We didn't really get into the difference between different types of PACs today, but if what your organization wants to do is make contributions directly to candidates, maybe you want to be able to attend candidate fundraisers so that your lobbyists start to develop relationships with those office holders. You might consider forming a traditional federal PAC or a traditional PAC under state law, which is also sometimes called a separate segregated fund. And that PAC can be used to raise money and make direct contributions to candidates. The key there is that it's not organizational money that's being used to contribute to the candidates. It's money raised from individuals, but the C4 or the C6 could pay administrative costs of that PAC under federal law. So it's great to have affiliated organizations to sort of balance your activities and house them in the right entity to maximize the strengths of each type of organization. But it is important to maintain separateness. You can't collapse the C3, C4, and 527 into one organization, which is often tempting to do. It's often tempting to refer to them under a single brand, but doing so risks attributing political activities to a C3 or too many lobbying activities to a C3 or other overlap. And so so certainly the organizations must have separate organizing documents. The board should meet separately and maintain separate minutes, have separate accounts and entirely separate finances. It may be okay to have overlap in the boards and managerial controls. Perhaps they share an executive director, but know that if there is a majority of overlapping control, you may be required to disclose transactions between the organizations on their 990s. Schedule R deals with related organizations and the transactions between them. Shared employees are okay, but you need a cost-sharing agreement to make sure that one organization is not subsidizing the other. And all other transactions between them should be arm's length transactions. So if one organization shares its list with another, that should be an arm's length transaction that's documented. So this was a very quick wrap up of affiliated organizations, but we will make these slides available. And we really want to thank everybody for their time today and joining us. Again, the CLE code was election 2024. And we hope you've gotten something valuable out of this. If we can ever be of help, please don't hesitate to contact us. Thanks, everyone.
Thanks, everyone.